While it's been a challenging environment for stocks and bonds of late, commodities and other real assets have rallied sharply over the past 12 months as inflation has increased. So, Emmanuel, can you tell us what are the most attractively priced inflation hedges that you see today?
Right. There are many ways to make portfolios more resilient to inflation. One of our favorite expressions right now is owning the currencies of large commodity exporters, both in developed and in emerging markets. And so that includes Australia and Canada in DM, but also, for instance, Chile, Peru, Colombia in emerging markets. And there are a few reasons we like this theme. First, these countries always have natural commodity and inflation beta. Second, we know that Russian supply has been disrupted, and so that shifts the demand for commodities to other commodity exporting countries. And third, the credit on many of these EM currencies has really picked up, mainly because EM central banks have needed to hike so aggressively in order to control local inflation. And then finally, one more, they screen cheap in our equity valuation models. One other expression of the theme is by directly trading commodity curves, especially the longer end of the oil futures curve. We think oil prices could remain elevated for some time because it will take time for alternative sources of supply to come online. And meanwhile, demand can stay strong because the economy continues to reopen, and also strategic petroleum reserves need to be refilled, and so on. And related to that, longer term in the energy space, this also really creates some compelling opportunities for green energy generation and green energy storage. And this was one of the themes that we discussed in our last secular outlook. And then finally, I also want to mention real estate and REITs. These offer exposure to the shelter component of the CPI basket, which is the largest component of the CPI. And in addition to that, they pay more attractive dividends now than they used to in the past. And again, here we work very closely with our specialists to identify high-quality companies in the REIT space in order to, again, align with our overall quality tilt that we have in the portfolio.
Aaron, this is a unique environment for many investors, especially those in the developed world who have not experienced this level of inflation during their career. Do you have any other advice for navigating this unique period?
Yeah, well, 2022 has been a challenging environment for investors thus far across the board, and we've had negative returns for pretty much every single asset class outside of the commodity complex this year. But these periods of volatility really oftentimes create compelling investment opportunities, and we're starting to see some of that. As active investors, we're actually really excited right now. In terms of advice, it's important to remain focused on the long term, to stay diversified, and to retain sufficient dry powder to take advantage of market dislocations and opportunities. And this is really what we're trying to do right now in our portfolio.